Hello traders, Gary Wagner here, just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, 19th day of October 2020, and this is the Daily Report for Gold and Silver. Make no mistake, with only 2 weeks left before the presidential election, COVID-19 has reached epidemic proportions in countries in Europe as well as certain states or clusters in the United States. We have surpassed 40 million cases reported, and experts are warning that it will get much worse in the upcoming weeks. That being said, we really didn't see gold or silver react strongly to that news, and I think that traders are waiting to see whether or not a stimulus bill can be passed prior to the election. We'll talk about that when we pull up our technical studies, but first to the price board. We are starting off the week with fractional gains in gold futures, currently trading at 1906.90, putting it up approximately 50 cents on the day, while spot or Forex gold closed up to the tune of $5.21 and is currently at 1903.80. When we look at pricing for the day, it is not so much the low that drew my attention, but rather the high on the day. The high for gold futures in overseas trading last night came in at 1923. We have recognized that 1920 has been a major area of resistance, which it has not been able to effectively close above for quite some time now. When we look at silver pricing, silver did close higher by 10 cents today at $24.50, with SLV closing up by 0.7% at $22.58 per ounce, and GLD closing higher by fractional amounts, 0.09 cents per share at $178.39. Platinum and palladium were mixed, with platinum trading lower on the day, $859.50, and palladium gaining $11.70, currently at $23.54. Traders, there are two strong takeaways from today's price action in gold futures. The first thing is the $1,900 level, which I've got as a red dashed line. I've just put a yellow arrow in there to show you that, has really been an area of support that has genuinely come back over the last couple of trading days. The question is whether or not it will hold. The other thing of critical importance was the high that came in today. You can see it was well above 1920. That is a price point that we have noted as a level of resistance that gold has not been able to surpass. You can see that over the last 4 trading days, which includes, of course, today. We have had 3 occasions in which we have traded just below or just above that price point, and on each and every occasion have closed below that particular area. So we seem to be caught in this narrow trading range as market participants look to see if fiscal stimulus bills will be passed prior to the election. Hope tends to be fading on that aspect, although the White House is cautiously optimistic. Although gold gained marginally today, it is still trading within these channel lines that we identified last week and spoke about the fact that we have seen a series of higher lows, but at this point, with the exception of today, we've not really seen a series of higher highs. We still see strong resistance, as I said, at around 1920, and I would prefer to either buy the bottom of this channel, which we almost reached today, or above 1920 on a closing basis, which we have not seen really since the second week of October, right in here, and that was only on one occasion where we saw the market close above that price point. And as we spoke about last week, those are the 2 parameters that would trigger a buy signal for us in gold. We are looking at a daily chart of December silver futures, this the continuous contract. We've seen many occasions in which there was a high correlation between the way we were viewing gold as well as silver. A case can be made for this market trading in a channel with a defined upward bias. We can also see that it had hugged the 100-day moving average, but over this last week has definitely moved above that. I absolutely believe that as we get closer to the presidential election, we will see A, an increase in volatility, and B, I believe we will continue to see a bias to the upside, although I believe over the next week and a half, it will become much more pronounced. In terms of our various support and resistance levels, strong level of resistance at about 25.75, that is the 23% Fibonacci retracement. We also see strong support at approximately $23 per ounce. That's based on the 38% Fibonacci retracement as well as the 100-day moving average. We are awaiting a strong indication that would trigger a buy signal. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.